How hard is it to get a home loan? Today we're going to be debunking some myths around getting a home loan. We're going to be discussing everything from credit to exactly what it is you're going to need to buy your first home. What is up, everyone? Nair is here to answer your questions about owning your first home. If you're new to my channel, welcome. My name is Nair, and I am a financial coach helping people who are looking to get ready to purchase their first home. Okay, let's talk about credit for a moment. That's probably going to be the biggest obstacle for a lot of people. What exactly is the credit score that you're going to need in order to get approved for a home loan? Well, it all kind of depends on what your goal is. Okay, so let's talk about lower credit scores. You are going to want to come in at about a 580 to get approved for an FHA loan. Your FHA loan is probably going to be one of the lowest ones that you can get, unless you're looking at the NACA program. If you want more information on that, check out my other videos on NACA. But anyway, let's talk about FHA for a second, because that's one of the most common first-time home buyer loans. It's not specifically for just first-time home owners, but a lot of first-time buyers end up using it just because it's the one with the lowest score. Now, let's talk about how your credit is actually calculated for a second. Now, you are going to want to check Credit Karma, my FICO score, all of those things, and you're going to look at it and you're going to say, my credit score is a 625. What you don't know is that everyone actually has different sets of credit scores. Yes, you have more than three. You actually have, there's 3 bureaus, but each bureau has different sets for different things. Different things for like home loans, car loans, insurance, retail. Retail is usually the highest score, and that's the one that you see on sites like Credit Karma, my FICO score, different things like that. Now, is that your actual credit score? For retail, it is. If you apply for a credit card, that's actually exactly the score that they are seeing. But a home loan, a lender for home loans, is going to be looking at the credit scores for your actual home loan. So what they're going to do is they're going to take all 3 of your bureaus and they're going to take the one that is right in the middle. So one of them could be 710. Maybe you were doing some credit repair that's really high. The other one could be at 600, and then your last one could be at 582. Well, guess what? They're actually going to be taking that middle score, and they're going to be taking that one as the one that you actually qualify for. And it might be a shock to you because you're going to be thinking, oh, my score is usually higher. What you want to think is that the home loans come in almost on average about 20 points lower than what your retail scores are. So keep that in mind. You are also going to want to make sure that you don't have any bankruptcies on your credit, at least not within the last 2 years. Kind of depending on the home loan program, and it depends on the chapter also that you filed under, but you definitely want to have it as clean as possible. Not a whole lot of charge-offs on there, not a whole lot of late payments, because even though your credit score might be just high enough, your credit report itself might end up being a pretty big stumbling block. So your lender might end up asking you for a whole bunch of different things like paying off old charge-offs, and it can get kind of ugly. So you want to make sure that your credit itself is as clean as possible before you start the application process. Okay, so the other thing is income. So they are basically looking for stable income. They're going to want to see at least 2 years of tax returns to see that if you've been making the same amount of money for the last 2 years, and they're going to want to see that you are making that same amount every month. So when they're looking at it, they're actually looking for an average of how much you make per month and how much you've been making per month for the last 2 years. And that number needs to either be totally steady or slightly increasing. They also don't like to see that you've been in and out of different industries, in and out of different jobs, in and out of school a bunch of times. They want to see that you are stable, that you've been stable, you're going to continue to be stable, and they're also going to calculate all of that as an average. So keep that in mind, because if you live off of your overtime, the only way that they will count that overtime is if it has been part of your stable monthly income for the last 2 years, so it's been filed on your taxes, and it shows that you're going to continue to be working at overtime as a part of your usual take-home pay. So keep that in mind, because if your overtime is kind of random and you don't really always get it, then there's a good chance that it won't get counted. So yeah, stability is key when it comes to income. The other thing that they are looking at is your debt. Now, this is not your expenses like your utility bills or your how much money you use to eat out every month. What they are actually looking at is your credit reports. They are pulling all 3 of the credit bureaus. They're checking to see what is an active account, what still has a balance, and they are calculating that against your debt. Okay, and this is how they come up with your debt to income ratio. They want to see what's going out and what's coming in is healthy enough to sustain that new mortgage payment. All right. Now, that includes everything that is a student loan, a personal loan, a car loan, credit cards. If you co-signed for someone else's loan or co-signed on someone else's credit card, or if you are just like a authorized user on someone else's credit card, there's a lot of little things that have to do with that, but if it shows up on your credit report, it is going against your debt to income ratio. So yeah, I'm not going to lie to you, this process can actually be pretty daunting. There's a lot of paperwork involved with it. You have to get ready to pull bank statements and pay stubs and tax returns and all sorts of other documents over and over and over again. But that is actually what I help people do. So I am a financial coach specifically for people who are looking to buy their first home. And I walk you through that entire process. I actually have a homeowners boot camp. And for 3 months, I do absolutely everything that we possibly can to get you ready to purchase your first home. And by the end of those 3 months, you're going to have everything pretty much settled. You're going to know exactly what to do with your credit. You're going to know exactly what to do with your budget to get that down payment. You're going to know exactly what else you might not have considered before to actually get you into a home loan. So don't do this process alone, especially if it's your first home. There's so many scary parts. Then once you get approved, you got to go through the process of bidding and getting outbid, and how do you get around that, and how do you get your offer accepted when other people are getting their cash offers accepted, one after another. Don't do it alone, especially like I said, if this is your first time around. Get someone to help you, either someone who has gone through the process several times, or someone like me who has gone through the process literally 5 times now and has helped so many clients do the exact same thing. I am actually a former loan officer. I actually still have a valid license. I just don't use it. I'm not a loan officer right now. I dedicate my time to just financial coaching to help people. So I'm not going to gain by you getting the actual loan. I'm not going to sales you into it. I am going to put your needs first. So if you got to wait a year or 2, I'm going to tell you. I'm going to do everything that is best for you, because your relationship with me is a lot more important than I'm getting paid when you close that loan. That's not what I want. I'm not going to sell you into something that I think is a bad product, or something that is financially probably going to be devastating for you. Like unfortunately some loan officers do. Okay, some lenders do that because they need to get paid. I do something completely different. My priority is my clients and their financial health and stability. So if you want more information on my homeowner boot camp, I will get you some information either at the end of this or down in the description below. And don't be afraid to reach out. I've got a consultation, a free consultation that I do anytime. I could at least take a look at your current financial situation, at least at a minimum, give you some good advice, and maybe even see if you're a good fit for the boot camp. So if you have any questions, feel free to reach out, and hopefully we'll talk to you again soon. Bye.